Welcome to the StockManor.com studios here in the beautiful Black Hills of South Dakota. I'm your StockManor, Brian Johnson. And the markets finished up for the day, but after a gap up to begin it all, they just slowly wandered their way back down most of the day. Little bit of a pop at the end, nothing really to speak of. However, certainly the start of the day was bullish, but the rest of the day was not. Just a very slow, winding way to end the week. Now, what is important to note here is that we did hold a lot of lower support areas on the indices. That was what I was watching for. Subscribers newsletter. We do that every day, by the way. The subscribers newsletter is done every day. And we talked a lot about that during the course of a week, certain levels that we wanted to hold. There's a ton of different lines I have drawn in those charts as well, showing, where these places are at. But anyway, point being, we ended up closing above those levels. So, very, very curious end to the week. Even though we had a pretty good push by the bears, we really didn't break anything overall in the bull picture. So, looking at the charts, here is your big move down. I want you to wipe out this big white candle and everything to the right of it. And as you can see, as we talked about earlier in the week, start from here, work your way up, and just this move alone, not all that convincing, to be quite honest. That's about a 50% retrace, pretty much in line with what you would expect. And with the little pop here towards the beginning of today, you'll see that we held beautifully to overhead resistance. So still have some work to do, a little bit by the bulls, but really there's a whole lot more work to do by the bears. This was just not all that convincing the last few days. This entire week, by the way, really didn't. I had some short entries and stuff for my subscribers and whatnot, but to be honest, I really wasn't all that bearish on the whole week overall. Just very, very, very controlled by the bulls on the way down. So back into overhead resistance, a little bit of a pullback, looking for something more coming into the beginning of next week. We can get back up and over these levels here, then maybe we can see the bulls start to take over again. Bears do still have a shot to save this, but right now, starting to hold these levels of support. They've still got a lot of work to do. Flip right to the daily. You can see we came down, retested this 20-day, held it beautifully, and once again held it today. Now, some people are going to look at this and go, oh, look at the big, wick on the top of this. Big deal. So what? This means nothing right now. Could be a potential inverse hammer candle here. We can make that into whatever we want to. Won't know more till next week. But once again, breaks above these levels here, and really this whole bear case is off the shelf for the time being. We are getting close. We are getting very close, I believe, to what could be a more serious pullback in the markets. Is it a new drop to major lows? No, I'm not going to go there with it, but a more major pullback for sure. Still got some work to be done, though. The bulls have done a fantastic job of holding on to all of these levels here, not even breaking the 20-day moving average on the Dow, which has been very strong. 2,400 was the level for the NASDAQ to hold. Now that it did not hold by the end of the day, tried to get above it today, and you can see it winded its way down most of the day. This is about the only chart here that is starting to look a little bit more on the bearish side from a 60-minute. This does look more like a bear flag as opposed to a bull flag. So on the NASDAQ side, the NDX 100 anyway, there is some work to be done to prove that the bulls do have this still in control. But let's just take a look at the place that we've been and the place that we went. Right back into lower support, holding it beautifully as of yesterday, and also holding today. Now, not the most bullish action, I will give you that, to end the week here with the big gap up and the move down. However, look at a bigger picture, guys. There's just nothing broke here. We held this lower support. Here's the weekly candle. So not really, we could call this maybe a dark cloud cover if you guys want to make it into a formation of some sort. But we got to, right now it's just a consolidation candle for me. It means nothing to me right now until we see some more further harder push next week by the bears below these levels, or what you want to be watching. That 2,400 would be something that the bulls, I think, will want to try to take back early on next week. We'll see if they can actually accomplish that. SPX 60 did the same thing as we saw on the Dow. Dive to the downside, pop to the upside, hold the 50-period moving average today, and drop the rest of the day. Lather, rinse, repeat. Looking at it daily, holding the 20-day moving average. Can you guys guess what I might be watching closely coming into next week? I think it's green. I think it's a moving average. Something to that effect. I'll let you guys figure it out. I'm watching that very closely next week to see if it can actually break. More importantly, not just break, but close below that area. Then maybe the bears do have something they can start to grab onto. We have had opportunities up here to take some shorts, but they really haven't amounted to much. I think the first entry I had for my subscribers this week was 1355, and by the end of the week, you ended up with 15 points. And that was if you could actually sit through and not panic when the thing was up, whatever, 15, 18 points at one point today here in the SPX. Important to note, still holding the 20-day moving average, still holding this overhead level. 1340 holding very, very nicely as support in through here. 1345 would have been a little better spot, but 1340 is just fine too. Looks very good right here still. The VIX spiking up. Did a very good job. Here is something to note. It did hold and finished very strong by the end of the week. So straight up for the VIX, getting us back into that 18-ish area. I like it over 19 to start to get myself a little bit more on the less content side of the markets, but holding this beautiful line of resistance for the time being. We've held it 1, 2, 3, 4, 5 basically weeks here over the last 6 weeks. We've tried to pound away at this line, have not been able to break it. So you can see this is a good solid place for the VIX to kind of rest. Will it hold? Will it continue into next week? It's anybody's guess. We've got the weekend to go. Who knows what news might come out? So we'll just look at what we got for the week, and that is a straight push up, 25% by the end of the week on a 3.65 move in the VIX. So maybe a little bit more nervousness coming into the markets, but I'll be honest, I'm not panicking at all yet. Neither is the market. We're just not into these upper levels yet. So yes, it's nice that the VIX popped a little bit, but overall, big deal. Apple 60-minute was down 9 cents today. This thing cannot get going. This does not look good. This looks like a descending triangle for the time being. Your breaks are still 345, 355. That has not changed. It is just the same story on Apple all week long. 1, 2, 3, 4, 5, 6, 7 weeks of, or 7 days, of wandering sideways here without the levels changing. And this level, the support starts to get a little bit stronger. Still is your point to be watching below the 50 here, right around that 345-ish area. Weekly as well, going nowhere, holding the 20-week moving average. Apple has been nothing for the last couple weeks. After the big push up here, you can see the consolidation happening. As long as it holds the 20-week moving average, which will be of great importance next week on any break below 345 at your next level, you'll want to watch that very closely. FAS on a 60-minute, also showing us a lot of gap up, drop. Same thing as we saw in the markets, not a big deal. Still looking for pushes. Really, right now for me, above $30, $30.50, and then back below 29 is still my drop to the downside. That is pretty good and looking very strong there for entries from a daily as well. Watch those into next week. Something above the 50, something below the 29 mark. Those will be your entries long and short. What are we seeing here? Consolidation, my friends. This is nothing but a giant triangle. This could be an A, B, C, D, E. If this is an E, then you would expect the break to go to the upside. From an Elliott-Tishon standpoint, that's exactly what I'm sure a lot of them are watching. From a technical analysis standpoint, I'm not expecting a break up or down. I'm just waiting to see what happens here. However, very, very clean symmetrical triangle and or whatever kind of triangle you want to call it. It's a symmetrical triangle is what it is from a technical analysis standpoint. FAZ, same thing, gap down, run up, coming back into these levels and going to a daily. Guess what we're going to see? This same symmetrical triangle, just a big fat symmetrical triangle working its way sideways. Could be an A, B, C. Let's see, A, B, C, D, E, maybe. That means it would be more bearish. Would expect that one to break down. Same story, guys. Just wait for the break, really. Back above 42, back below 38 are probably your most conservative entries. Yeah, and that's probably where I would be pointing you. You could get more aggressive. Below 38.50 if you want to get more aggressive. Back above 42 on your trades next week for FAS and FAZ. But overall, this has been nothing but sideways action. We were up a little bit this week. We were down a little bit last week. We were up a little bit. We were down a little bit. This is a consolidation. Makes it very, very difficult to trade. Please be careful if you're trying to trade FAS and FAZ. These are not bad stocks to trade on a daily basis for day trading. But if you're looking to swing trade these things and hold for a week or 2 weeks or whatever, yikes. Just need to be very cautious with this. Once this thing breaks, once FAS and FAZ make up their mind which way they're going to go, I think it could be a very strong, powerful move. And if you're ready for it, now you're talking about very good, solid entries for swing trades that you can hold for a while. That's what we're waiting for. Don't just throw your money at things and hope for the best. isn't going to help you. All right, that'll wrap it up for the Friday video. I'll be back with you again, of course, on Monday. If you guys like the daily videos, getting a lot out of them, you'll get a ton out of the subscriber videos. There's just so much more in it. I do those starting Sunday. The only day I do not do a subscribers video is Saturday. And I send out intraday updates showing everybody where we're at and what we're looking at, those type of things. I don't do it every day, but I do during the course of a week, especially when we see lots of movement, like to send out intraday updates to let everybody know kind of where we're at so they have something to at least kind of, gives them a little extra sense of security if you have somebody else that's kind of, this is where I'm at on it. If you feel the same way, then you know you're probably in pretty good shape. So think about that. 28 bucks a month. Cheap, cheap, cheap. A lot of you are going to spend that tonight on dinner and drinks. Easy. Easy. So why not spend your money on something that's going to help make you money? This is how it works. Sometimes sometimes you got to spend money to make money. It works in all kinds of businesses. I'm finding that out for myself as well. Sometimes you got to take a chance, got to take a risk, got to spend some money to make some money. That's where we're at. Okay, I'll let you guys go. We'll see you again on Monday night. Bye.